Everybody. I appreciate the opportunity from the PTAC and from all of your time this morning to listen to my presentation. It may seem if it's going to be a little dry, I'll be very honest, because it's government contracts, but I'll try to make it exciting. Yasmin and I were talking just before we started about why the SBIR STTR program, or some people say SBIR, is great, because we get to see so many really cool technologies come out of this program. We get to see companies who grow. And even if you're not ready for the program, or if you've been in it for quite a long time, you know, it's always great to have a little bit of a refresher. For 2 seconds, I'll just kind of tell you why I think I can tell you about this stuff. As Yasmin mentioned, I'm the managing partner for Arrowhead Solutions, and we're a full spectrum, as part of GovIRG companies, we're a full spectrum government contractor support group. And I've been personally working with the SBIR STTR program for about 15 years now. And so I have pretty much seen everything. I'm a contracts manager by trade, but in small businesses, of course, contracts managers are a lot proposal manager as well. And when we talk about the SBIR STTR program, we kind of have to look at the entire life cycle. So I've seen multiple life cycles of multiple awards, all the agencies, all the changes that have happened throughout the years, and a lot of really cool success stories of small businesses going large. In fact, just this morning at midnight, one of my favorite clients, who's a core SBIR STTR program, also where all their technology was funded, they were just acquired by a large business at such a high dollar value that had to be approved by Congress. So that is how powerful this program can be. So we'll talk first. So that's kind of how I'm here. I talk about this topic a lot. I'm really excited about it. And I'm happy to share more information. What we're going to talk about today, specifically about risk and you know, avoiding mistakes. And I wanted to give, in case people aren't familiar with this program, and I don't have a slide for this, feel free at any time to Google sbir.gov. It's a wealth of information. It provides quite a bit of detail on the program, how it works, what agencies participate. It has success stories. It has a lot of tutorials and training. But in a nutshell, this program is mandated by Congress. There are 13 agencies, I believe, this year who participate. Their participation is dictated upon the R&D budget that they have in-house, and they have to allocate a particular percentage of their R&D budget to this program. And the program is a 3-phase program. Every agency manages it a little bit differently, but in essence, what they're trying to do is give you non-dilutive money. NSF calls it, National Science Foundation calls it America's Seed Fund. So non-dilutive money in the realm of $50,000 to $250,000 to kind of test your ideas, help them achieve some basic objectives. You know, they have problems, they have needs. They want your ideas, and hey, I've got some solutions. And then if you can get that feasibility tested out and they like it, you have the opportunity to go to phase 2, which could be, you know, up to $1.5 million. And that's typically a 2-year process of getting that idea to a prototype demo stage. And then the whole point is to pull that thing or idea, product, service, whatever it is, out of the program and get additional money in phase 3 that's non-SBIR colored, and take it to market and commercialize. The whole point here is to commercialize. So you can see that this is a really valuable program. You know, feel free to reach out to me. I can point you to other resources to learn more about the program. But I also want, this whole point here is to talk about, if you're going to go into the program, or you've heard about the program, or you're considering it, or you've been in it and you've been burned, what do you need to know before you get in? And I'll say this, a lot of the things that I'm about to talk about today about risk, navigating red tape, you know, what happens in proposal time, what happens in contract time, compliance, and like kind of planning and strategizing for the future. This is applicable federal wide. I mean, I wouldn't say that this is really super SBIR, STTR specific. I will have some specifics in this presentation, but you know, I think that if you are considering working in federal contracts or grants, you can probably apply this across the board. So, but that large introduction, that is going to be what we're going to be talking about today. So the first thing I want to talk about, so again, there's a lot of mistakes you can make. These are the ones that I see my clients. I founded Arrowhead Solutions 13 years ago. I've been in government contracts for almost 21 years now. So I've seen a lot of mistakes, and they all kind of boil down to these 10, and they could be shifted in order, but number 10 I've labeled here as subcontracts. When you are taking federal money and you're directly taking a grant or contract funds from an agency, you're considered a prime contractor. And if you are not doing everything in-house, if you're what we call making or buying, you know, you make this decision, we're going to make something, we're going to buy something. If you're going to buy something, you need to flow down the clauses from your contract or your grant. So typically, we'll have federal acquisition regulation clauses to give to subcontractors or vendors. If you're under a grant, you might have Code of Federal Regulation clauses to go down. And the whole point is that you're the steward of the taxpayer money. And if you're not kind of acting like your contracts or grants officer in terms of spending that money, you could be in a whole bunch of trouble. There's also requirements to obtain consent on certain agreements. This is particularly important for DoD phase 2 SBIRs that are of a particular flavor, which we won't go into today, but if there's a requirement in the contract that's a clause that's just a title, and you may not know you have to do this. So that's a big problem. And if you don't get consent, you might have to pay money back to the government. The other thing we talk about with subcontracts is a lot of folks want to say that, oh, well, I'm using a staffing agency, they're not a subcontractor. Or I'm using a consultant, they're not a subcontractor. I'm sending a purchase order out to a machine shop, that's not a subcontractor. In general, you know, without getting into contracts level 501 college course sort of thing, pretty much everybody you're spending money on is technically a subcontractor. So we're always going to have to think about flowing down clauses. We have to understand which ones need to go, which ones don't need to go. If you've ever been a subcontractor to a prime, you may have seen this. You may have received a big old contract with a bunch of numbered clauses, or you may not have, depending on the sophistication of your prime. And there's going to be commercial clauses, there's non-commercial clauses. I mean, again, this is like, I can do probably a 4-hour training just on subcontracts, but this is just, be aware that there is a pitfall here in terms of spending money. We want to be able to issue agreements to third parties to buy things, goods and services. We want to do it efficiently. So this is why I talk about tailoring in the second to last bullet. We want to make sure you're not dumping your entire contract on your sub. That's just burdensome. We want to have some corporate risk strategy in terms of the risk that you want to offload from yourself and onload to a subcontractor. And we also have to be considerate of auditors. If when you get to the point of, for example, a DOE SBIR program, when you receive $750,000 in revenue in a year from DOE SBIR, you're going to be subject to audit. You're going to be subject to DOD audits. You're going to be subject to various people looking at your spending. And if you haven't spent it correctly, you know, we're going to have some issues. So we just need to be pretty careful on spending. in the SBIR program, I'd say until you get to the higher dollar values and you've been in it a little while, it's not too scary. You know, nobody's going to be knocking on your door for $50,000 to see how you spent the money. I'll be honest. As a taxpayer, I don't know how we all feel about that, but you know, just know that if you're going to be participating in this program, if you want to graduate from this program and get money from the government in other ways, this is going to be something you're just going to have to really tackle. We tackle it with policies and procedures and training and templates and forms, all that good stuff that you can imagine. I have an example of a flow down. This is a Department of Defense clause, and it's in every DoD SBIR contract. And you will only see this clause come in with just the title and the number. So if you're scanning through your contract, you see it, once in a while, you might see this in full text, but you can see the requirement for the flow down in paragraph C, where it's telling you that you have to include this clause or something similar in all subcontracts. And so if you're not looking for this, if you're not aware for it, if you're not aware that you're supposed to flow down clauses and you issue an agreement to what we'll call, I don't even care if you put it on a napkin, whatever it is, you're giving money to somebody and they don't know that they're not supposed to disclose information about the project, and they do, and they don't know that because you didn't give them this clause. Guess who will be in trouble? You, not your sub, because the sub didn't know. So this is kind of going back to that corporate risk strategy situation. You know, understand that you're trying to pass risk down. So again, this is like a whole 4-hour class. But in general, there's a lot of mistakes that people make in this area. Number 9, this goes back to proposals time and registrations, particularly if you're brand new to the program or you're interested. You know, maybe you get excited because you see a topic or solicitation out there and you think it's perfect, but it's due next week. A lot of people will call and say, I want this, do I have time to do it? And I'll always say we can make time to write the proposal, but you can't make the wheels of government move any faster. So the things that you will need in order to participate in the SBIR STTR program are a host of registrations, and they have to be done in order, and you have to give yourself time to do it. First is, you know, an EIN, tax ID number, of course. Hopefully you have that if you're in business. You'll need a DUNS number, which is now changing. Come April, it'll be called a unique identifier number. Right now, you get that from Dun & Bradstreet. And then once you have those two things, you can go ahead and register in SAM. And that's, you know, a whole situation of certifications and representations. But that will give you what we call a cage code, which is important. And then you obviously have to register in grants.gov or whatever SBIR site. You also need to register in an SBIR.gov site as well. There could be an SBA registry if you're not in that as either. And then every agency also sort of has their own proposal submission site. So you can see that if you haven't done any of these and your proposal's due next week, you may not have time, because each of these things, I mean, you'll have to do your own work in however long that takes you to do, but then you have to wait on the government to take a few days at least in each of these registration sites. So here's a thing that I've run into a few times as an example, is that you've got everything ready, your whole proposal's been done, and then you're filling in forms, and the forms ask you for your SBA registration number. And, you know, where is that? Where do you find it? Do you have time to do it? You know, this is just one of the hiccups. And then all of a sudden you find out, I can't do this proposal. I just put all this time in, and now I'm just sitting here twiddling my thumbs, waiting for, you know, this other registration, or I don't have the information to put into this other registration. So be very prepared and be very honest with yourself that even if you find the perfect opportunity, don't waste your time if you don't have the time to do all the registrations. Number 8. This actually could be number 1 for a lot of people, depending on who I work with. Them losing your proposal most often hinges on the path of lack of innovation. So the I in SBIR stands for innovation. So SBIR is Small Business Innovative Research Program. So the government is looking for innovation. The agencies will typically put out topics, and for DoD, they might be very specific and very granular. You know, I want night vision goggles, or I want a new sort of lithium battery, or, you know, something to that effect. Or they could be super broad, like National Science Foundation. Just give me a new idea for robotics. And that's just, we just want the coolest robotics idea that you have. So understanding what the agency's objectives are for robotics, or, you know, what things have they funded in the past, or if it's very granular, for example, the DoD will be minus the Air Force. We won't, Air Force is a little different beast, but they'll be very specific and say, here's our phase 1 objectives. They will clearly say, here's our phase 2 objectives. You know, they will clearly point those out. So you may have an idea of what the agency needs, but if the agency is telling you what their objectives are, or they have an interest area, you have to match that. And it has to be innovative. It has to be state of the art. It just can't be a rehash of something that's already in the market. It can't be too far along in the development process either, because we're looking for feasibility. So when you're writing your proposal, we need to have objectives met, and it has to be clearly stated in the page count that you're given. Also, they don't want to fund something that isn't going to go to phase 2 and phase 3 and beyond. And we'll talk about this a little bit further, but we have to have a plan for phase 2 when we write phase 1. So I'm going to do feasibility analysis now in phase 1, but here's how I'm going to take it to demo and prototype in phase 2. Here's how I'm going to take it to commercialization in phase 3. So that's really important to be very clear that to the reviewer, that you've thought about this project, you've thought about how you're going to use the money, you've thought about this thing that you're going to develop and how you're going to grow with it, you've thought about how it's going to impact the agency and, you know, the market as a whole. And to be honest, those people who have relationships with the technical point of contact or the program managers are really more successful. And that's because they understand the needs at a deeper level. They haven't just read some words on a website. You know, they've really done some due diligence. Not everybody can grab this relationship. The good thing, one thing I'll say about NSF is that they have program managers with their names and phone numbers. And specifically NSF will do a phase 0 to where you kind of just pitch your idea and they'll invite you to phase 1, which is really great. So certain agencies are definitely a lot easier to talk to than others. The Army has a kind of like unsolicited topic idea area in their website. You can throw ideas there and maybe get some contact with folks that way. But in order to be a little bit more successful, I will say that is, and I'd say that's kind of across the board, especially in R&D, to have relationships in the government makes it a lot easier to get money from them. As with anything, I mean, I think commercial world's pretty easy, same way. So this is a question I get a lot. You know, people will kind of ask me sometimes to help them triage their proposal if it lost, and they'll send it to me and say, what happened? And often when as I just mentioned, when I review it and I look at what the ask was from the agency, or I will find that it's not clear to a reviewer who's reviewing multiple of these, like why this is innovative, why the government should invest in this. Remember, this is seed money. This is non-dilutive capital. You know, why do you understand what you need to do with the money? Like, did you clearly communicate you're going to meet their objectives? And I would say when I read debriefs from particular agencies as well, almost always it says something about, you know, I just didn't understand why this was innovative, or you didn't consider. Another thing that I see a lot is, well, did you consider this, or did you understand that there's this alternate technology that can do what yours can do? Like, they are pretty savvy. I mean, these are smart people who are reviewing these proposals, and they're pretty critical. So it's very critical to really think about your innovation when you're writing your proposal. Number 7, it seems really obvious that you should invoice on time and do it properly. But it doesn't happen. And in the SBIR program, you know, different agencies will use different portals, applications for invoicing. And it could be a multiple step process. There's, of course, it's governments, there's codes. You might have funding limitations, but I call this a mistake because when you're a small business, cash flow is huge. And if you are not getting you're paid, you're not invoicing, then you're impacting your own cash flow. And this is like one of the easiest things you can fix. The government is not slow to pay. Like, I don't see that, particularly in the small business programs. I don't see slow payment. I see people making mistakes in their invoicing, causing payments to be delayed. There's people too who don't understand that there could be a funding limitation on their contract. You know, they might get $1 million contract, but it's only funded for $200,000, and then he goes spend $300,000. You know, every contract's a little bit different, especially in the SBIR program. You might have performance-based milestone payments. You might just kind of get paid monthly. You might get paid upon, you know, 3 times for deliverables that are just reports. You might have a cost reimbursable grant or contract. There's a lot of different ways they can pay you, and the invoicing instructions could be different, even within one agency. So you have to be very aware of how to invoice and when to invoice and how to fix the problems, because otherwise you won't get paid. And somebody may not call you and tell you there's a problem, by the way. Here's an example of what the DoD uses, which is Whiter Your Workflow. It's IRAPT now, all of the acronyms. But anyway, you can see that there's an acron, there's this clause, it's got all these codes. It becomes pretty overwhelming when you just look at it on its surface. But if you stepwise through it, it should be pretty self-explanatory, or you can reach out to someone, you know, who's done it before and have them train you or your bookkeeper. But I would definitely recommend just being understanding of this and ensuring that you know how this thing works. Here's a screenshot of what Whiter Your Workflow looks like, and it's not intuitive. And I think that's kind of part of the problem. If you don't know all of these codes and where they come from, definitely reach out and ask for help. If you have a contracting or grants officer, or what we call an administrative contracting officer, an ECO, they're supposed to kind of be able to help you with some of this stuff, or they can point you to who can. Once you've done it a few times, it should be okay, but don't ruin your own cash flow by just trying to do it and guessing and hoping it goes through, because if it gets stuck, it's just going to delay, and you're going to it takes time to undo what you've done and to resubmit. So you can see where I'm going with this. Just pay attention. Mistake number 6 is not delivering on time. This is kind of funny to me as well. This is another one of those common sense. You know, if you're doing good business, hopefully you're delivering on time. But this can sometimes be a problem with the government contracts and grants for two reasons. One, the way that they're structured, there could be conflicting information or may not be written in layman's terms, of course. Or two, there could actually have been mistakes made by the person who wrote the contract or grant. And it can kind of feel, especially if you've got a good relationship with your agency, that you might have someone, your program manager or TPOC, who says, oh, it's okay if you get it to me late. It's okay if this isn't done yet. There's a lot of no cost extensions that happen in the SBIR STTR program. I won't go into those right now, but just know that you can get no cost extensions as long as they're in the best interest of the government, as long as you're not failing. You might have to give something in return, but overall, just do your best to deliver on time. And the first thing to do is understand how all the dates are calculated. You might have a line item that says something's due on such date, and then you might have what we call a CDRL, which is a form, a deliverables requirement, and it might have a different date. So before you sign your agreement, look at those kind of things, look for conflicts there. And if it doesn't make sense, then reach out to your contracts or grants officer and get a clarification. Understand, when things are actually due, because, say the grants officer put something on a Saturday. When is it actually due? Is it due Friday? Is it due Monday? I looked at a contract last week, and something was due on November 31st. So, that obviously doesn't exist. So hey, grants officer, when is this actually due? Don't assume that schedule slips will be okay. So don't assume anything. This is probably, overarching best practice. Don't assume anything. You could definitely be right, but most likely you're wrong. And always ask questions, always get it in writing, get clarification. And even though your program manager says a schedule slip might be okay, your grants or contracts officer probably doesn't know about it, and they're going to ding you for being late. Those two people don't necessarily always talk to each other. The contracts officer, we'll talk about this in another mistake, has a lot of authority and power. And just because your buddy, the program manager, says don't worry, that doesn't mean you're going to be fine. Going back to assuming, communicate any issues. Be very clear, if you're doing technical interchange meetings or monthly status reports or whatever of issues, particularly if it's a government caused issue. That happens quite often. And don't be afraid to tell the government, hey, you promised me this data set, or hey, you told me I would have access to this, or whatever. I had a client who needed to use a proving ground in order to do munitions testing. And the way that it worked out, the munitions testing ground wasn't available for like 3 months. And so the company had to alert both the contracts and grants officer and the TPOC as soon as possible to say, hey, you know what, this is out of our control. Here's what we've done. What do you suggest we do? And not wait till the last minute to talk about that. They can help you formulate alternative plans. And if you're having internal issues or you're having a problem with a subcontractor, again, you don't want to look like a bad performer, but you also want to be clear to them that something's happening. And again, we've got workarounds, we've got fixes, here's what we're going to do. Don't let it come to bite you in the end to where you fail and you don't perform your scope of work or you're late. Management of subcontractors and vendors is a huge deal. Obviously, you've got your agreement. Hopefully you did it right. It's sitting over there on the shelf and nobody has to look at it. But during performance, if they're not marching to your drummer and they don't understand your objectives and your goals, you could have some issues with the fact that what if they don't deliver on time? What if their quality is subpar? This happens more often than you think. And if you're not doing a great job of managing them, and managing them starts with writing them a really great scope of work, or being very clear in a purchase order about what's due, what quality requirements you have, when it's due, and being super on top of things, because the last thing that the government wants to hear, even though you should tell them, is, oh, well, we're late because my sub's late, or, oh, we're late because the delivery's late. Now, I will say right now, because of supply chain issues, there's a lot of lateness happening with hardware. You know, we get that, but, you know, there's circumstances. But in general, the government doesn't want to hear your problem. They're going to say, you know what, that's your problem. We don't have, and this is something I should mention, kind of GovCon 101, the government doesn't have what we call privity of subcontract or contract with your subcontractors. So you're the person managing in between. And if they cause you to be late, the government's going to say, too bad, so sad. You should have done better at managing your sub. And then always remember that your performance is recorded, whether it's an official record, if you've ever heard of CPARs. If you've done a NASA SBIR, you'll get notice that you have a CPARs record that your program manager has, talked about your program management, your budget, your performance. They kind of grade you on everything. But even if it's not officially recorded, it is recorded in the brains of the people who work in that program. I mean, these SBIR offices aren't huge. If you are doing quite a few contracts and grants, you'll probably see names repeating themselves as your POCs. And so if you do a poor job, that's going to be remembered. Humans are humans. And so that's really, really important. Make sure that you're delivering on time. Here's an example of what I was kind of talking about between CLINs and CJOLs and statements of work. I had to write an email yesterday to Missile Defense Agency about this specific thing. And I think there's actually a mistake in the contract, but I don't know. So the contract has an end date of, January 31st. The contract requirements of CJOL 2, which is the deliverable for CLIN 1, is due 12/31. But the statement of work that's incorporated into the contract has a 12-month period of performance that doesn't match either of those dates. So which dates prevail? We have a lot in the SBIR program, you'll hear this term called technical period of performance. So the technical period of performance may end on a certain date, and then you have 30 days to write a final report. And then maybe the government has 30 days to review that. There's a contract end date, there's a technical period of performance end date, which prevails where. And again, back to don't assume and communicate. Don't assume that the contract's perfect. There's often mistakes in contracts. And so always ask for clarifications. It's really important. Again, another section we could talk a couple hours about, and this might be number one for some of you, but intellectual property protection is a really, really big deal in the SBIR STTR program. And that is twofold. One, because this is innovative technology. There's a lot of startups in this world, and they have, they're hoping for investment. They're hoping for acquisition. This is their bread and butter. And so pre-existing IP, it could be huge, something that was paid for exclusively at private expense, really valuable. Secondly, and the SBIR program, you have a level of protection, even though this is paid for by the government, and in normal contract, off the shelf contract, if something's paid for by the government, they have unlimited right to it. But because of the nature of this program, again, we call it non-dilutive, capital seed funds, is because the government's investing in the development of intellectual property, and they're saying, you know what, we won't touch it. Like, we might have a little tiny use for it, but our hands are really tied in terms of what we can do with it. We want you to take it. We want you will always own it. You always have a title. So just know that. But we want you to grow it. So, you know, for specifically for DoD, and we're seeing this in all the other agencies as well, start adopting is a 20-year protection period. It used to be 4 or 5 years, depending on the agency. Now it's 20, which is awesome. So, however, you don't get that 20 years and you don't get to protect existing IP unless you identify it and mark it and report on it. And when we talk about IP, it's patents, it's technical data, it's all these things. So the government gets unlimited rights and SBIR data rights, depending, you know, on where you're coming from, unless you can assert what we call limited or restricted rights. So this is the stuff that's pre-existing, developed exclusively at private expense. Like this is stuff you're bringing into your SBIR program. And if you don't tell the government in a proposal that I'm bringing stuff in, like there's stuff that you don't get, regardless of 20 years or not, you have very limited use of. If you don't tell them and you don't get that into your contractor grant, then you've just given unlimited rights to your stuff. The third way of doing of protecting besides assertions and markings is really a strategic element. And that is not developing stuff with government money. And so that's, you know, there are some people who particularly who have investors and, you know, angels and whatever, and they specifically they segregate their R&D on which money they use, and they're very particular in what they deliver. There's quite a few things you can do, but just know that assertions and markings are the best things to do. And don't just assume that because you didn't deliver something that it's protected. You know, the government likes to use these words like developed by, or if it's a patent, you know, conceived. So this is, again, if you're concerned about IP and you have something valuable, I would highly suggest you know, doing a tutorial, taking a class, reaching out for more help, because this is a very specific area that, especially in the SBIR program, you could, you know, a year or two down the road, you realize you gave away really something valuable and you don't want to do that. This bolded deforest clause here at the bottom is a clause that is in all DoD SBIR contracts, and I have deviation in exclamation points because this is the 20-year rule that is fairly recent. It's about 1.5 years old now. So an example, again, I could talk about this forever, but you know, example, you put some of your company's IP, we'll say it's a schematic, in your final report. Before, when you did that and you handed it over, did you assert rights to that data? You know, assuming it was pre-existing, you know, is it developed exclusively at private expense, and this idea now is a drawing, and now the drawing's in the government's hands? Did you tell them, like, does everybody agreeing, like, the government can't just go off and use that now? And when you sent that over, did you properly mark the report with a correct legend? So there's a lot of markings and cover sheet stuff and legends that need to go on your reports for SBIR programs. And there's not clear direction in the contractor grant exactly on how to do that typically. So if you didn't do it, then you could have just given it away. Now, I will say the government often doesn't know what they have, right? So it's not the end of the world. But if you have someone who wants to acquire your company, and you don't have a good IP inventory of who you've given what, and you know what things the government might have right to, that will definitely dilute the value of your company, particularly if IP is a strong element of that value. Here's an example of an assertion and a legend. This may or may not be listed in full text in your contract or grant. But the assertion part of the top half of the screen, it's a table. And this is typically, if you don't include it with your proposal, which may or may not be required, you do provide it to the contracts or grants officer at negotiations, and it should go into your contract or grant as an attachment. And then the legend, the second half, comes out of the clause. This is the defarce clause specifically. And this is the sort of thing that you would see like on a title page of a report to protect the data that was created with the SBIR money. So again, this is really abstract because I have 5 minutes to talk about IP, but if you have questions about IP, or I definitely suggest reaching out or taking a class on IP. Number 4 is commercialization. So I mentioned this before, the whole point of the SBIR STTR program is to commercialize, is to take a nugget of an idea, a basically sort of tested idea. If you're familiar with TRL or technology readiness levels, we're talking about, a level 2 idea and taking it all the way to a 9 on a scale of 1 to 10. And if you don't think about what that 9 looks like, what 2.5 years down the road looks like for this thing, then you will either fail by not getting a phase 2, you'll fail because you didn't get a phase 1, you'll fail because you got to demo a prototype and nobody wants to buy what you built, So, and that in the SBIR STTR program, when you reach a certain number of phase 1s and phase 2s over a certain course of time, you get a commercialization score. So you just can't take contracts and grants and just kind of go on this phase 1, phase 2 hamster wheel. You actually have to show, I am getting sales, I am getting revenue, I'm getting an additional investment off of the technology that was developed with the SBIR money. So commercialization is always the goal. And you start in phase 1 about, okay, here's where I want to be. And these transition goals are critical, and they'll come up faster than what you think. And the government will also make a lot of assumptions about how they think you're going to commercialize. If you're not very clear in your proposals, and most of the agencies will require at least a paragraph, sometimes 2 to 3 pages of commercialization discussion. What's your market? How are you going to get there? What additional investment do you need? Who are your customers? Who's your competition? If you're not clear and haven't really thought that out, they will fill in your gaps for you. And usually that fill in is negative. And they'll say, you don't know what you're talking about. You don't know what this market is. We're not going to give you this money because we think it's just going to go to waste, is really what they're saying. So commercialization, particularly in phase 2, is a very important evaluation factor. But if you haven't thought about it in phase 1, then you're not really worthy of the phase 1 money. And so, don't go into this program thinking I'm just going to do some R&D and it's going to be fun. You really have to develop something and get some sales off of it. You have a long time to do it, so I wouldn't freak out about that bit, but no, you will be scored. I have clients that have been in the SBIR STTR program for decades, which is really surprising, but for decades. And they even struggle to get their commercialization scores high enough, because if you don't have a high enough commercialization score at a certain point, your proposal will not even be evaluated for new phase 1s. So just as a long-term warning there. 2 commercialization examples here. So commercialization goal number 1, we want to get your innovation into market with high volumes and high sales. And number 2 is we want to fix the agency's issue post phase 3. So there's 2 elements here. There's kind of like the market that's outside of your particular agency. So that could include other government customers. And then there's the agency itself who says, we had a problem. We got you to a demo and prototype. Now we need you to get this implemented into our mission or into our systems. And we have non-SBIR money to give you to make this a program, for example. So we've got these kind of 2 paths that certain technologies could go on, or they could go on both. mission-driven agencies, or who would I call like DoD and NASA, they're usually mostly focused on your ability to convert your phase 2 into a phase 3, mission of record or program or system. Like that's really where they want to go. And if you can't meet the first definition of commercialization, though, that, just getting into the market with volume and sales, then you're not going to get to number 2 either. So you really need to do an evaluation in your proposal about whether or not you can meet one or both of these commercialization goals. What are the possible market opportunities? If you can't see them, then the government evaluator definitely will not be able to see them. Number 3, taking direction from someone you're not supposed to. This is across the board, government-wide. I won't spend too much time on this because it's kind of obvious, but there's only certain people who are authorized: contracting officer, grants officer, officer representative, technical representative. You'll have a letter in your award that tells you who can talk to you. There's certain direction from like the technical team who can tell you what to do, but most of the time you need actual approval. So if anything changes your schedule, your price, your scope, that needs to have approval. And if you don't know, then you ask. Don't fall to like schedule pressure. Don't be changing stuff because your PM says, hey, I'm getting a promotion in 2 months. And if you get me this stuff fast, then then I'll get my promotion, or, and all of a sudden it causes a problem or you spend too much money, that's always an interesting issue. But it could be necessary to talk to your technical representatives and like listen to them. Always kind of be aware though that who ultimately has the authority, and, can you take that technical direction without asking for, the blessing of the officer. It's always a case-by-case basis. I don't have kind of a general rule of thumb, other than if you don't know, then err on the side of asking the contracting officer or grants officer. This is just a really quick example about changing the paint color. Saying, hey, the specs say one thing, the PM says one thing, the cost is going to be the same. Typically, if the spec isn't included into the contract, you can change the color. The spec can be edited and delivered at a later time. But specifically, if changing the color of paint from yellow to red changes the price, then you definitely need to talk to the contracting officer or grants officer. So this is just kind of like a rule of thumb. Know who has ultimate authority. It's the person who signed your contract or someone they've designated. Number 2, not reading. So this, again, another common sense item. Read the entire solicitation. Read the entire contract. You miss something in the solicitation, you're going to waste time on a proposal that won't be selected. If you don't read your entire contract, you're going to goof up and you're not going to get paid. You're not going to do something correctly. You're going to have deliverables rejected, whatever. In proposal time, especially SBIR, STTR, they come out in rounds, and each agency has different rounds. Like NASA is about to come out, they're once a year. DoD is typically 3 times a year. Don't assume that the solicitation you read last time is the same as this time. NSF is kind of rolling, but they change theirs annually. So, be very, very, clear that you're reading the right one at the right time. Understand all the attachments you need, the page counts, the section headings. The good thing about the program is that in general, like the sections that you need for your proposal are about the same, the content that you need, technical, key personnel information, price. So that's good, but every agency is different. So if you have the same idea and it could apply to DOE as well as it could apply to, Department of Transportation. Very different, especially our Air Force versus NSF. Extremely different. Like those two things couldn't be more different. You would never even know they're in the same program. So don't assume that just because it's an SBIR, they're all the same either. When you get your contract, also, you know, the scope, the pricing, the type, the payments, the reportments, all of these things you have to fully comprehend. And going back to one of our other mistakes, you know, nothing should be a surprise. Nothing should be assumed. Get everything clarified, and then read things. You know, I don't think you need to sit down and read the clause that's called, you know, drug-free workplace. That's kind of self-explanatory, unless you wanted to put yourself to sleep. But you might want to read the disclosure of information clause I sent out. You definitely need to read the safeguarding cybersecurity clauses. There's a lot of new clauses that just came out that are super important. There's the COVID-19 protocol clause that's coming into everything. You know, read it. Are you okay with it? Do you want to sign that contract? You know, this is all really important stuff. Just an example, this actually happened a few years ago. I believe this was a DOD where there were 11 parts in the technical section that you had to write around. And the next year there were 12. And so I received a bunch of proposals from clients to review, and they all had 11 parts. And everybody was missing the 12th part. So, because everybody just kind of took what they did last time and redid it. So be very careful. There's a new form, you know, every once in a while. You know, some people say, oh, there's a form. It says I have to sign it in the instructions, but there's no signature line on the form, you know. Sign the form, you know, even though there's not a signature line. There's a lot of funky mistakes in solicitations too. There's, you know, another contract example, contract mistake on price, you know, just a typo. You definitely want to make sure that your contract has the right proposal amount there. Again, new clauses, this 7012 DFARS clause is that cybersecurity clause, if you haven't heard about it. And it's a huge endeavor. It's a huge thing to take on. And do you know it's there? And do you know that you could be caught if you don't have it? So again, read your contract. And final, number one, failure to understand what success means. So in a situation of kind of be careful what you ask for, there's some strategy in participating in this program. Some people say, you know, this is our bread and butter. Our portfolio is going to be filled with these contracts and grants, and that's what we want. We want the government to be our customer. And they're fine with that. They're fine with the accounting system approvals, audits, invoicing, property protection, performance benchmarks, admin systems, IP protection or IP giveaways. All of these things will come if you stay in the program long enough, if you continue to take government funds outside of the program, if the government's going to be your client. There are a lot of my clients who say, I just want a little bit of phase one money and a little bit of phase two money, and I'm out. And I'm not going to do this. I want to be a commercial company. That's not the intent of the SBIR STTR program, but that does happen. And that is a strategic decision. And you better have a game plan on how to fulfill that going forward. But because they don't, all of these things that you see here that are bullets, they don't want these things. And that is their business decision. So, you know, it is a government world. Even though it's small business, you will still have to do things like maintain government property. You will still have to have, you know, at some point, you know, a specific accounting system that's different than what you would have commercially. There's still requirements for other administrative systems like procurement systems. And so there's a bigger admin situation that happens with these contracts. And it's not something you need to be super worried about in your first couple of phase ones or, you know, whatever. But the longer you stay in, the more important that becomes. So don't get excited and jump in and then say, oh, well, shoot, I don't have the money to have an approved cybersecurity system. Like, I don't know how to do that. Or I don't want to manage government property. Or I don't want to segregate my chart of accounts the way that the government requires me to do that. Well, if you don't want to do that at all, then maybe you shouldn't be in the SBIR program because it's government funds. So that's something to think about. I mean, this is kind of like a long-term strategy thing. again, you know, how long do you want to stay in the program and who do you want to be your customer? And then how do you build your company around that? Examples is, you know, Navy, they do phase 2s that are cost plus fixed fee, which requires you to have a pre-award system survey. They warn you in the solicitation that that could happen, and they tell you what you need to do to get ready. Again, if you don't read the solicitation, you wouldn't know, but you have to be prepared and aware. Like if you want a Navy SBIR phase 2, then you need to get your administrative systems in order, and that's going to cost money. So are you okay with that? So don't be surprised. That's the biggest mistake. And just some best practices, kind of a summary here. Always think about commercialization before your phase 1 proposal. Always understand the customer and their needs. Don't push your stuff on them as much as understand what they need. Always manage IP. Always. Even, you know, this is huge. Manage all your contractual requirements. Don't just focus on technical performance. You also have to focus on like the management and the business performance is really important. And always deliver on time, the best that you can. And we just have a few minutes for questions. I didn't see questions come through in the chat box, Yasmin, but
thank you,
if anybody
Stephanie.
has questions.
Yeah. That was great, really detailed and helpful. Appreciate it. Yeah, I haven't seen any questions come through, so I'm guessing that your presentation was so detailed and informative that you answered all their questions already. But I know that I believe you put your email address on the presentation. Is that correct?
Yes, it's here on this, if you can still see my screen, right? And
no, you stopped sharing, but that's okay. I'm going to be, oh yeah, there you go. I'm going to be sending out the presentation shortly, and you'll have a chance to review it again. And if you have any questions, obviously you can reach out to Stephanie. So we do appreciate you so much for doing this. This has been fantastic. And I'd like to thank our audience as well for showing up and staying to the end. We appreciate it. And if I don't hear from anybody before in the next couple of weeks, have a wonderful holiday, stay safe, and we will see you again at a future webinar. Thank you, everybody, and bye-bye.
Thank you, everyone.